Welcome to Know Better to Do Money Better, the podcast that's here to help you avoid stressing about money and make smarter money choices. This show is a production of the Financial Empowerment Conference series, and in each episode, we break down the habits, strategies, and mindsets that make managing money understandable, doable, and actually fun. Because let's be honest, you work hard for your money. It's time your money started working hard for you. From practical budgeting tips and real-life success stories to straight talk about mindset and wealth building, this is your space to learn how you can do better with your money, one episode at a time. Because when you know better, you do better.
Good evening again. Thank you for joining us for this episode of Know Better to Do Money Better. This is episode number 4. Our last episode before this March's Financial Empowerment Conference. And with me today, I'm Kevin Turner, by the way, co-chair of the Financial Empowerment Conference Series. With me hosting is Tasha Hurley. And then we have 2 guests tonight who will be a part of our panel discussion at the conference. We have Aaron Benyon to my left and Tara Alderete on my left as well. So we'll be hearing from them tonight. They'll be sharing some of their experience and what they do in their business and how they can bring that to the conference in a few weeks. So we're looking forward to hearing from them. So with that, like each of you to just give us a quick introduction of kind of what you do in the financial space. Either one of you can start.
I guess I'll kick it off, or it should be ladies first. So Sarah, I apologize. I'll let you go first.
Okay, all right. Well, thank you.
No problem.
And thank you for having me. Again, my name is Tara Alderete. I'm the Senior Director of Enterprise Learning at Money Management International. So we're a nonprofit credit counseling and housing organization. We're based in Stafford, Texas, but we're nationwide. We were Consumer Credit Counseling of Greater Atlanta. And now we're the MMI doing the same great stuff that we've always been doing in Atlanta. So, yeah, just happy to be here.
Great. Thank you.
To piggyback off what she said, I'm happy to be here as well. I'm Aaron Benyon. I'm a commercial banker with Pinnacle Financial Partners. I've been in the industry, probably doing the same thing for over 21 years, kind of started as an intern. But now I kind of assist businesses and business owners with growing their company, structuring debt, understanding cash inflows and outflows, managing risks, liquidity, really just kind of being a strategic partner and advisor. So,
Great. So we got really diverse backgrounds here. We've got someone who is speaking more to the personal debt side and then more on the business debt side. So we should have a very good discussion tonight. We're looking forward to it.
yeah.
So for each of you, if you could just share maybe a misconception that people have about your particular area of expertise.
I guess I'll go first this time.
Yeah.
I think for me, it's probably that banks just say, kind of yes or no when with regards to doing a deal or, advancing some capital for to expand or whatever, because there's always a deal that a bank can do for a borrower. Now, whether that deal is to your benefit or the bank's benefit is the kind of the real question or the real thing. But more so than just provide a yes or no answer, I think one big misconception is that we don't want to assist, whether it's the small business or the large corporation or those who are searching for access to capital. I think we want to accomplish all of that. It's just more about, kind of finding the right structure or, from a timing perspective, if you're in a place where we feel that you could take on some debt and be able to kind of repay. So it's not just a yes or no with us. For most bankers, it shouldn't be just a yes or no, but it's more so providing some form of strategic advice to get you to your kind of ultimate goal.
Yeah, great. Thank you.
So I would say in our area, at MMI, we do a lot of different things. So from helping folks create a budget to saving, getting out of debt, purchasing a home, all those different things. And I would say one of the most common misconceptions is I can't, right? I can't get out of debt. Homeownership is not for me. I can't do it. I can't save. And you can. So it's a very big misconception across the board, I think, especially now. And I love being able to sit down one-on-one with somebody and say, you can, and here's the path. And when you see the look in their eyes and they realize that that misconception is just that, and they really can, it's amazing. So
That's great.
That's
Yeah,
awesome.
when somebody's light bulb comes on, especially if they feel like something is out of reach for them, it's just a beautiful thing to be able to say, no, you actually can make this happen.
Absolutely.
Yes.
Yeah, I would agree with that 100%.
Yeah.
And I guess from your perspective, Aaron, in regard to what you were talking about, I think sometimes people may look at the bank and think they're looking for a way to turn you down.
Yeah, that's probably better well said than what I said. But yes, I think that's a huge thing because people, you hear these horror stories. I can't get this loan to make it happen. I think banks make money by lending out money, so it's important for us to output, capital to get that return. It's just a matter of, managing our risk, but we always want to be of assistance and to help. Sometimes it's just a timing thing. Sometimes the current financials don't align. But again, there's always a deal to be done. Now it's just whether it's a good deal
Right.
for you or the bank. And so, but we try to
Hopefully it's a win-win.
yeah, that's why we try to hover in the middle to be beneficial for both parties. But yeah, well said. That's a good summary of my statement. But yeah.
So I want to piggyback on both of your points, and it's going to flip the questions that I already had down, but now it makes me want to ask if you had to pinpoint one risk or opportunity people may be overlooking in this space. So you mentioned about for home lending and that education. What would you say is that risk, or one risk and or one opportunity that people may be overlooking?
So I'm going to say in our space, I think the biggest opportunity is debt. I think, so we offer debt management plans, and as an NFCC certified organization, we offer those. And I think people oftentimes overlook that because they think, wow, this sounds too good to be true. It
Mhm.
probably is. You're going to give me consolidation without a loan. What's the catch?
Yes.
But as a nonprofit, there really is no catch.
Mhm.
And so I think that's probably the biggest missed opportunity that you can get out of debt in 5 years the right way.
Right.
And I think it's a risk as well, right? Because
Right.
people run that risk of increasing credit, increasing debt, running down their credit score because they don't see a way out.
And I think the other thing to be aware of, what's healthy with what you're delivering, is that there are opportunities and ways of repairing your situation the right way.
Yes.
Because there are plenty of scams that are out
For sure.
there that
Yeah,
are like,
absolutely.
oh, because you see the little signs on the side of the road at the
Yeah.
traffic lights. Oh, pay $1,000 and I can clear your credit,
Yeah.
clean up your credit score.
Right.
So I hear what you're saying. So I can't wait until we get the information, more information from you, how to contact you and all those good things. And you'll get a lot of that when you come to the conference.
There you
So
go.
don't forget. Okay. Yeah, shameless plug. Shameless plug. I've got a knack for that. But so Aaron, what is your perspective on that?
Yeah, I'll kind of try to toe the line on both the consumer side and the business side. From a risk perspective, I think being over leveraged is when I say over leveraged, taking on, kind of too much debt. And debt is just a tool, but you got to use it the right way. And I think when people take on too much debt, both from a consumer side and a business side, it really hinders them. And I think a part of that in the past, because money is a lot more expensive, I think previous rates were so low that you were able to kind of get away with some of that and being over leveraged. But as rates are kind of ticked up, the risk is just because you can quote unquote qualify or have accessibility to it, that you tend to over leverage yourself. So
Right.
those are
Yeah, it's really
Right.
that's a true risk for me, like on a everyday basis that I see a lot.
So basically, what you're saying is, if I qualify for the 1.5 million
Yeah,
house,
yeah,
because I have that kind
because
of
your
power,
income
says that,
Yeah.
but I still need to eat. I
hmm
need to keep the electricity on, which is going to be more expensive for that house. You may not want to max out.
absolutely.
There you
I
go.
I think kind of living within your means is always a good thing, and that looks different for
For
everybody
everybody.
in every household. It could be if you have a spouse or significant other, maybe it's looking for a mortgage qualification based off of just one person's income,
Mhm.
or combining those salaries but only taking 65% of the combined salary.
Mhm.
So anything you can do to put some margin for yourself is to your advantage, in my opinion.
Planning for that rainy day.
There you go.
Grandma used to talk
Yeah.
about that, and it's still true.
Absolutely.
Might be in a new age and a new time, but that old school is still good.
Still
All right,
matters.
it's still applies. So, I'll start with you, Aaron. How would you describe the current environment as far as indebtedness and lending in simple terms?
Yeah, kind of piggybacking again off my last point. I think money is expensive, and managing money is it's an everyday struggle. Whether you're on the consumer side or if you're in business, you're constantly trying to manage your liquidity and cash flow. Um, so with money being a little bit more expensive, you need to make sure you have liquidity available to service your debt obligations, or more importantly, your cash flow. Um, and again, what I think has happened, if you go back, I don't know, even 3 or 4 years, you take rates at 3%. Well, you find yourself able to afford things a lot more because you're not getting hit with so much interest versus you can buy that same product now, but it'll almost be, kind of double the cost. But because you're already thinking, well, this is where the market was 3 years ago, it's not the same, but you're not accounting for, kind of just the overall increased cost and inflation. So, um, it's a tough thing. It's a tough thing to kind of constantly manage and balance on the business side. You think through those things and you always want to say, well, you know, does this allow me to grow my company, right? Or does this debt allow me to purchase this equipment that will allow me to scale my business? And I think on the consumer or personal side, you just constantly like, man, can I afford this? Or is this a want or is this a need? So it's just kind of that continuing that constant balance because money is so expensive. The cost of capital is just so expensive right now.
Yes.
Yeah.
And you definitely have to make a choice, wants, needs, and is it going to develop you along your long range plan or just surviving today versus looks good for today, but it's going to be a part of your downfall if you're not thinking it all the way
That's a
through.
great point. Yeah,
Yeah, so it's
absolutely.
develop or destruction, one
Yeah,
of the two,
there you
right?
go.
Right. So Tara, what is your take on that as far as how would you describe the current environment as far as indebtedness and lending in simple terms? Because that's actually your sweet spot with education and
Sure.
learning and development. So
Well, yes, 1000% yes. Everything that Aaron said. What we're seeing is consumer debt, of course, is on the rise. Household expenses are steadily increasing. And consumer debt is actually higher among younger individuals. And so I think it's what we're all feeling, right? I think it's what we're all feeling at the grocery store, at the gas pump, all those things. And so, again, it's critical to really, really evaluate that budget and say, okay, what can I cut out or cut back, even if it's just temporarily? How can I increase that emergency savings fund in case something happens? How can I rein in this debt? And really set myself up for lasting success regardless of what happens in the marketplace.
Yeah,
Right, right. And it's interesting that you're saying that you're finding that more in the younger
Yes.
generation. Do you find that that's more because of starting out you know, salaries are they're way different than they were when I started in 1992. But anyway, would you say it's some of that, and it's just the cost of living for apartments? Because I had a pretty nice apartment when I started out, or whatever, and it was only
Times have changed.
3 digits for
Yes.
the rent.
That's
And,
crazy.
and you know,
Yeah.
we had the opportunity to build equity along the way,
Yes.
and so purchase a second or third home with a pretty large down payment.
Yeah.
Yes.
So all of those things. And then, you know, I think we talk about this a little bit later, but the other thing that we see is that financial literacy or financial wellness is decreasing with the generations. And so I think all of those things come together to sort of widen that gap for younger adults.
Mm-hmm.
Yeah, so that's a good point about
Yeah.
the financial literacy gap that may exist,
Yeah.
and hopefully we can help to bridge that gap.
Yes,
We have
yes,
an online
yes,
course
Look at you.
that is specifically geared towards young people. Had a conversation actually today with the leader of our young professionals ministry, and we're going to try to get that group to be a part of this online course because
Awesome.
Wonderful.
they really need that kind of information
Yes.
so they can make smart decisions, hopefully as early as possible,
Right.
and not get themselves behind the 8 ball.
Yeah, absolutely. That's awesome.
Right.
Awesome stuff.
Because when you hear that, we want you to, you know, you have the tools at a younger phase than when I feel when I started
Yeah.
out, at least, or whatever. It was just like you save. My dad was big on cash, no credit cards, all that kind of stuff. So, I mean, and it's just different now.
Right.
It's different now, the way younger people see how they want to secure, you know, going on a trip, when they want to go with their friends and everything.
Yeah.
And then you got to make some decisions.
Facts.
And the reality is that the things that we were taught, those old school things that maybe are not as in vogue now, they still work.
Sure.
And we
The
need to
principles
try
don't
to
change.
apply them even in this age, because
Yeah.
sometimes you get caught up in what's the current thing,
Yeah.
Right.
but that's not really working to your advantage.
No,
Right.
it's
If
not.
you're working somebody else's plan, you might not be working your own plan.
That's
Yeah.
right. You're just helping them to
Make
become
them
wealthy.
Yeah.
Right.
For sure.
Yeah.
So let's talk about just kind of some practical things that people can take away, because we want the podcast to be something that people can look at and actually implement right away. So just for either of you or both of you, just tell me something that the average person might want to do differently now than maybe what they're doing, or what conventional wisdom might tell them they should be doing.
I guess I'll go. You know, I know we kind of said this before we started recording, but I really would say, you know, just kind of budget your funds. And what budgeting does, in my perspective, it kind of gives you this permission or freedom to spend kind of on a guilt-free basis, but it also allows you to understand where your money's going. And so when you get, we call it a trend analysis in banking, where you have 3 years where you can review historical data, but same difference, you know, on the personal side. If you got 3 months of information or 6 months of information, you can see where your money's really being allocated, because you're accounting for kind of those dollars. And so I would, you know, immediately say, you know, try to focus on a budget, a way that you can kind of track and allocate your spending. And then on the second part of that, it would really be to make sure you can, you know, have, you know, 3 to 6 months, if you're just starting out, of some form of an emergency fund. You know, if you're a little bit more seasoned, you probably, season meaning age, you probably want to focus on 6 to 9 months. But I think an emergency is the inevitable, so it's important to kind of have, you know, something prepared for when that happens. And you know, when I do some consumer training, so to speak, I say, if you don't have anything else, have your deductible saved, right? And if your deductible is $1,000 for a car, $1,500 for your house, at a minimum, you know, have your deductible saved at $2,500. That will allow you to at least know, if something crazy happens, you can cover this extreme cost because you got that allocated. So
That's a
That's
really good point,
good.
because sometimes people look at like, okay, I need to have this much of an emergency fund. That's going to take me forever.
Yeah, for
But
sure.
if you have some mile markers that can get you there, that you can say, okay, I've had that success.
Yep.
That will give you the incentive to keep going.
Yeah,
So I like that.
Yeah.
Mhm.
I always say deductibles first, man. If you just never know what's gonna happen.
That's
You
right.
get a little fender
You know
bender into
something's
some
going to
gas.
happen. You just don't know
You don't know
when
when.
or exactly
Yes.
what.
Yes.
So I think that's just a good starting point for most people as they're on their journey. So
Excellent.
I like that.
Well, you are speaking my language.
Yeah.
I think the most important thing people can do is create that budget. It's interesting because we'll do community workshops, online workshops, and one of the questions I always ask is who, and you don't, not even a budget, right? I'll say who has a budget-ish, right? And half the hands or less go up in the room.
yeah.
And so what I've learned is that regardless of how much money you make or what you do or who you are, most of us sort of bump along in life, don't have an actual budget.
Mhm.
Something happens, we're forced to build one, we have no idea where to start, right?
Mhm.
So create that budget, give yourself permission to spend. I love that.
Yeah.
Give every dollar a purpose
Yep.
and make saving, at least for an emergency savings fund, an unnecessary expense.
Mhm.
So automate it, even if it's $10 a week or a month, make sure that it's happening on a regular basis, watch that grow.
Mhm.
And again, as you reach your deductible or whatever it is, you get momentum.
Mhm.
You've done it, you've hit the goal, you can keep going. So all those things, I think saving and budgeting work in tandem to really help sort of give you that solid foundation that you need.
Yep.
And see what that says is what that says is you put it in an account where you don't have a debit card, where you
Yes.
don't have any kind of way that you
Yes.
can take it out. It just goes there. And it's like you never see it, and it's not where you can do what is it the overdraft protection.
Yeah.
You can't even attach that
Yeah.
to it.
Yes.
Yeah, it's literally you have to isolate it.
Yep.
In my opinion, I'm not the financial
I
expert.
That is,
I
that
do
is
it that
actually
way. I do it
probably
that way.
the most effective way.
Yeah.
I mean, it's a crude way of saying, but think of it like a Roach Motel. They go in, but they don't go out. So make sure the money has one way in.
One way in.
It's a lot
And-
harder for it to
Yes,
get out.
exactly. Okay,
Absolutely.
see, I know.
You're on.
Okay,
You're
Kevin,
on.
I know you're on to your next question.
Okay, so for you, Tara, another question kind of related to something you mentioned earlier. We were talking about indebtedness and the fact that people are starting to use, in a lot of cases, credit cards more
Right.
just because of affordability issues and so forth. What are some things that people can be doing to avoid that kind of a trap? Obviously, if things are more expensive, you got to find some way to pay for it. But to what Tasha was saying about understanding wants versus needs, just give us your thoughts on how people can approach that and not find themselves falling into getting further and further behind.
Yeah. I'm glad you asked the question, and it's interesting. We just were talking about this. It's not only credit card debt, but the other thing that we're seeing consumers get into trouble with is buy now, pay later.
Ooh.
Very easy,
Mhm.
no credit check right now, no
Mhm.
interest. But if you miss a payment, you're in big trouble.
For sure.
And so I think it goes back to building that solid budget, right? Making sure that you've got a purpose for every dollar and that you are creating a situation where you're building in some discretionary income, and you are not spending above your means.
Yeah.
And the other thing that I would say is, I mean, that sounds a lot easier said than done, right? A lot of this is mental and it's
Yeah,
psychological.
sure.
And so just keep in mind that even if you are pulling back on some items, it's temporary, right?
Right. It's
We
not
know
bad.
everything's going to change.
Mhm.
It ebbs and flows. It's temporary. But what you'll likely find is that, let's take cable for an example,
Mhm.
right? I cut cable when my son was 4. He's 17 now. We cut cable big time. And I said, well, let's just see how much he misses Dora and Diego. And you know what I noticed is he wasn't missing it too
He
much.
found something
Mhm.
else.
We were streaming stuff. It was a
Yes.
little different, and so we do things differently today.
Mhm.
And so I think that's what you find. But yes, I think to answer your question, it really is just build that budget, make sure that you understand that this is achieving your goals.
Right.
And that things are temporary and that they are going to change, even if it hurts a little bit right now.
Yeah.
That's
That's
good.
great stuff. We are going to take a very short break now, and then we'll come back with a little bit more from our guests in just a moment. Don't go anywhere.
The views, opinions, and financial discussions shared on the Know Better to Do Money Better podcast are for educational and informational purposes only. The content presented is not intended to provide legal, financial, accounting, retirement, or investment advice. Listeners should consult with a qualified and licensed financial planner or professional before making any financial decisions. Listening to this podcast does not create a financial advisor-client relationship between the listener and the host, contributors, or any affiliated organization. The hosts, guests, and creators of the Know Better to Do Money Better podcast operate independently. Turner Chapel African Methodist Episcopal Church is not providing financial advice and does not guarantee, endorse, or warrant any of the financial strategies, opinions, or recommendations discussed. Podcast host Kevin Turner is the president of Peak Level Advisors, a financial planning firm independently contracted with Money Concepts International. All securities through Money Concepts Capital Corp., member FINRA/SIPC. Peak Level Advisors is an independent firm and is not affiliated with Money Concepts. By listening to this podcast, you agree that Turner Chapel African Methodist Episcopal Church, its pastors, leaders, employees, volunteers, and representatives are not liable for any losses, damages, or actions taken in reliance on the information provided in this podcast. Listeners further agree to indemnify, defend, and hold harmless the church and its representatives from any claims, liabilities, or expenses arising from the use or application of the information discussed on this podcast. Financial topics may be discussed in the context of Christian faith and biblical principles. However, such discussions are not a substitute for professional financial counsel.
And we are back.
All
Take it away,
right.
Tasha.
All right. All right. Thank you, Kevin. All right. So we've been talking about a lot of things and what effects, financial decisions have on us. But how would you say, in your professional opinion, how would you say emotions affect financial decisions? Either one. You take your pick. Who wants to go first?
Yeah, I would say emotions 100% affect financial decisions. That's both on the commercial side and on the consumer side. What you tend to find is fear causes you to freeze. Greed causes you to potentially stretch beyond your means. Ego would cause you to ignore red flags, right? So you got these three layers of emotions, and what you typically find is the most level-headed person, or the one that's calm, who can kind of fully digest the scenario in full, tends to make the better financial decision. Because when you're operating off emotions, just with anything else, it's somewhat of an intoxicant. You're not fully thinking clear-minded, and so you tend to make an impulse decision, which typically would not be to your benefit. So between fear causing you to freeze, greed causing you to really stretch beyond your means, and your ego just causing you to just ignore the red flags, because your wants would outweigh, what you really need, or your ego would buying this big old house when you probably shouldn't, do all of that. So you got those three levels of emotion, but when you're kind of clear-headed, when you can take a couple days before making a big financial decision, it allows those emotions to kind of curtail, and then you can tend to make a better decision, in my opinion.
The cool head prevails.
There you go.
Yes, the
There you
cool
go.
head prevails. So Tara, what do you say about that?
I again agree, and I love this question. This is a topic that it's an emerging topic that we are hearing more about. We're talking more about this idea of the psychology of money, money trauma. So in addition to our emotions, I think it's also important for us to think about our past experiences and what we bring to the table when we're talking about financial wellness and financial decisions. It's interesting because it's just like any other relationship, right? We have a relationship
Yep.
with our money, and in any other relationship, we hear the term baggage, right? Like,
Right.
but what kind of baggage are we bringing? So what we saw, what we had, what we didn't have, what we heard, what we didn't hear, all of those things come together, and then they work in tandem with our ego and our, greed and our joy and our sadness and all those different things. And they can shape our decisions. So I think it's important to recognize what we bring to the table, ask ourselves, why do we feel the way we feel when we spend? Why are we spending? What is this really giving me? And then sort of get to that root cause.
And all that is so important, because I think our relationship with money is based a lot on our past experiences.
Sure.
Right?
Yes.
Where we've been burned by certain things, or we didn't have certain things
right.
all the time, or whatever. So as soon as I get to be an adult, I'm gonna have all the pizza I want, and I'm gonna
That's
turn
right.
my air conditioning down to 62
Turn on the
or
lights on.
whatever, and turn all the lights on and run the water. Yeah, so
All at the same time.
time and jump in the middle of the bed. Now that we're talking about that, what is one habit or mindset shift, since we were talking about emotions, that can make a big long-term difference? So we're kind of angling down on the first question. So what's one habit or mindset shift, in your opinion, that we can change?
Okay, so I'm a big advocate of positive thought, right? But I think just sort of changing that scarcity to opportunity, right?
I love that.
And really sort of this idea that I can't, or how can I? So really just sort of shifting the way we look at things. This is not for me, or this is, and how can I do this? And the other thing that I wanted to say that I always think about when we talk about this sort of topic and what we can do is the idea of generational wealth, right?
Absolutely.
And so I always think this way. We know what generational wealth means. But what if it starts at a lower level, right? What if it means sharing that conversation, that positive mindset, that it is for me attitude with our kids at our kitchen table,
yes,
in our schools,
yes.
in our communities, in our churches, and then it starts to build, right? So I really am a big advocate of positive thought, and really just putting it out there that you can do this. There's a
Yes.
pathway. Ask the questions, take advantage of the resources, and do the work, and you can do it.
Yes,
So-
I love that. The psychology
Yeah.
of it. I love it. And just the positive thought.
Right.
So, Aaron.
Yeah, I'll try to answer on both sides. I think from a commercial or business standpoint, I think one big change or focus you should continually have is just cash flow management, continuing to assess, do you have the profitability to kind of manage your business and the working capital. And you do that by, properly forecasting 3 to 4 months in advance, whatever your operating cycle is, making sure you got a full in-depth understanding of that and what it's going to take to kind of operate your business from a break-even standpoint, which will get you to profitability. I think on the consumer side, something very similar, but managing money is tough. So I think understanding the budget and taking the thought of a budget being a kind of a negative connotation and more have it geared toward positive thought, and then, but also sometimes sometimes you just need to make a little bit more money. Honestly, and so a part of that would be to kind of continue to be strategic for your personal self and sharpen your skill set to kind of allow you to be to increase your income potential, because you kind of use your biggest asset with regards to income. So kind of continue to invest in yourself, or to allow you to kind of increase the amount of money you're making. I think will help.
That's a good idea. And then you have to think about, and I know we'll hear more about this at the Financial Empowerment Conference, March 13th and the 15th as well. But thinking about, extending yourself, or what can you do to make more money without going further into debt too,
That's true.
right?
Yeah.
Because there's a cost to make
Mhm.
money.
Mhm.
So
Yeah. And I was more so thinking about just becoming more knowledgeable with whatever your specific skill set is, or if you see a different path, if you, I don't know, are a CNA and you want to be a RN now, kind of making those strategic investments into yourself personally, which allow you to kind of increase your income potential.
which a lot of jobs offer upskilling, free upskilling through your webinars and courses
Yeah.
at work. So, when you see those things fly past your email, you might want to look at it
Yeah.
again
Instead of hitting
because
the delete button.
instead of putting it in trash or junk or phishing scams and all that kind of stuff, that's an opportunity to invest in yourself
Absolutely.
and not really have to extend yourself further into debt. And sometimes your job will pay
Oh,
for
yeah.
your certifications once you upskill.
Yeah.
So there's an instant opportunity right there, low hanging fruit. So that's those are both excellent points.
It's got to be as resourceful as possible.
Yes,
in this,
in this
this
economy, and sometimes it's right in front of
Yeah,
us, and
absolutely.
it's staring us in the face, and we just kind of blow past it.
For sure.
Yeah.
I agree 100%.
Mm-hmm.
Let's talk about kind of some actionable takeaways that people can benefit from. So, if somebody who's watching today was just trying to figure out, okay, what can I do right now? Something they can put in place in the next few days, in the next week, that would actually make a difference in their lives, whether it's from the business perspective or from the personal.
Yeah, I would say from a business perspective, something you should immediately do is see how much runway you have with your liquidity. Like if things go haywire, how much cash do I have on hand, or what's my burn rate? How long can I survive? Should sales go flat but expenses remain stable? So kind of figuring that out from a business perspective, that will allow you to kind of build from there. Similar thing on the consumer side is, how much liquidity do I have? What if something were to happen from an emergency standpoint? Am I able to kind of service that expense? And part of that, again, we keep using the word budget. And budgeting is very difficult to do because there's always something you need. You budget, I don't know,
Or want.
It can be something simple, and you don't realize how much you're spending until you look at the allocations of it. But I would say, if you're spending a lot on credit cards, try to relieve yourself from that pattern. Although you're paying it off every month, you're creating this inept pattern that you probably don't even realize for the points, which is sometimes a different story. But and points are okay. I do want to say that, but sometimes you hear people
It goes
spend.
back to, I think, what you were talking about in terms of who is it benefiting.
Yeah.
There's a reason why the institution
Yeah.
is trying to entice you to say, get these points, take advantage of it, because they understand that the more you use it, the more likely you are to have to pay more interest and fill their pockets.
Absolutely. So I would say the first thing from a business perspective, figure out how much cash you got on hand, figure out your burn rate, and then focus on cash flow from a consumer standpoint. Kind of basically the same thing, see where all of your money's going. And then if you're kind of just starting out, let's get to at least that deductible point, or put together a plan to get you to that deductible, whether it's the car first or, renter's insurance, whatever the case may be. So, yeah.
That's good.
Tara, for you, give us, whether it's something you personally use or something you might counsel others to use, a rule of thumb. Now, of course, we understand rules of thumb are for guidance purposes.
Yeah.
They may not always apply to every situation, but what's something that you would say is something people can latch on to and say, that's something I should pay attention to?
A figure, a number. I like net worth. I like net worth, right? The difference between what you own and what you owe. Because I think it's an accurate indicator of where you are, and I think sometimes we lose sight of that.
Yeah, for
We're
sure.
like, oh, we got a raise, or oh, we decreased our debt, or oh, we increased our equity. But if the cost or the value of our house goes down, we didn't increase our equity. And so I think looking at that net worth at least once a year is a great indicator of where you are and sort of your financial health or temperature.
Yeah, that's well said. Because quite often in this society, we look at income as this is how I'm making it because I make X amount of money. But you can make this amount of money, but if you spend this amount of money, you're not getting
That's right.
ahead.
That's right.
Yeah.
You're in the red.
Yeah, that's true. So I think, let's see, we are ready for our round robin rapid fire round. You didn't know we are going to do this, did you? Yes. We got a timer right over there too. So I'm going to be like, come on, let's do it. All right. So rapid fire round. First question. Okay. Aaron, best financial advice you've ever received. Go.
Live below your means.
Okay. All right. So
Probably not the best answer.
no, that's
It
very
still
good.
works.
It still works. Budget, get emergency fund. Those are 3 answers.
Okay, great. All right. Tara, did you want to?
My dad, he was like, he had foresight. You use that credit card only in a case of an emergency. And so, so what I would say is best financial advice is credit cards are not free money.
There you go. That is good. That's good. Okay, Tara, back to you. One book, one podcast, or resource you'd recommend.
Money Management International has a podcast. It's called Long Story Short. The short is with a $sign, so check it out. It's fantastic.
Okay.
Yeah.
All right. Aaron, one book, one podcast, or resource you recommend.
Oh man, I'll give 3 good books.
Okay.
No Excuses: The Power of Self-Discipline by Brian Tracy. The Millionaire Next Door by Thomas Stanley. And there was this very popular book called Proverbs that a young man named Solomon wrote, which I think is a very good guidance on how to live, especially for men. So
there you go.
Those are my 3.
All right now. Okay, Aaron.
Yes.
One question everyone should ask before making a big money decision. Go.
Yeah. How does this impact me in the next 3 to 5 years? Is this a want or need? And what is the benefit of me making this important decision in the next 3 to 5 years?
All right. Tara, one question everyone should ask before making a big money decision. Go.
What's the total cost? What's the total cost? When I pay interest, fees, down payments, all those things, how much is that car actually costing?
That drive out.
Yeah.
That bottom line that gets shoved back and forth across the table. Yes, that's right. Yeah, no hidden fees, all those kind of things. Okay, all right. Aaron, what excites or concerns you most about the future of finance? Go.
Yeah, I would think what excites me is the access to financial literacy tools without kind of the red line. I mean, you got your phone. ChatGPT could be a good resource in theory. The access to capital for entrepreneurs, which is something that I think is a driving force to the economy. From a commercial standpoint, it's just having resources available to assist those large companies trying to grow. But conversely, what kind of makes me a little bit nervous is that we're making decisions so fast that I don't think we're able to fully evaluate the risk, right? You can get a decision in 2-3 minutes, or you're making a big financial decision, whomever, but we haven't fully evaluated the risk because we're so quick to provide the quick turn on efficiency. So
see, still makes sense to sleep on it.
Yeah.
That's what grandma would say.
Yeah, there you go.
Okay, Tara, what excites or concerns you most about the future of finance? Go.
God, there's so many things that excite me. Okay, but so that statistic we gave, or that about financial wellness decreasing with the generations, right? It's a bit of a concern, and what's exciting about it is that financial literacy and sort of the spotlight on the importance of that is on the rise. 26 states now require financial education in high school. Georgia is one of them.
Come on,
So I think since the 2024-2025 school year, our kids in Georgia have to get financial wellness in high school.
Awesome.
Yes. And so I think with that sort of thing, right, comes this fantastic opportunity for education and empowerment and things like this. And people are talking about it, and we're going to see big change.
Oh, I love
Yeah.
it. I love it. I love it. So that is good energy. These have been exciting responses. Quick on your feet, too. I love it.
Yes.
Yeah, rapid fire. Come on.
Well, with that, we are going to begin the wrap-up process. But before we do that, are there any final thoughts either of you have that you would want to leave with our listeners?
Just you can do it, right? Just you can do it. Just dig in, start today, you can do it.
Love it.
I would echo that. You can do it, whatever it is. Write it down, kind of create a plan, both financially and personally, and kind of take baby steps to kind of strive towards that. Would kind of be, and listen to this podcast a lot.
Yes.
Yes. Do it.
And show up March 13th.
Yes.
There you go.
13th and 14th.
13th
and
14th.
15th.
And the
Oh,
15th.
oh, my bad.
Yes, it's a
13th
whole
through the 15th.
weekend.
Yep.
I
It's a
apologize.
whole weekend. Well, Kevin's going.
For the two of you, if someone wants to find out more about yourself, your company, how can they find you online or any kind of way?
Yeah, so I'm on LinkedIn, Aaron Binion, Aaron, Binion, Binion. Or you can email me. I'm pretty responsive via email. So aaron.binion@pnfp is my work email. And, I may not know all the answers, but again, I'm pretty resourceful and can kind of find, someone that may be able to provide guidance or assist you. And kind of similar to what Tara does, we provide some financial wellness courses kind of in-house within one of our offices we call a peer center. So would be thrilled to have you all come participate in that as well.
So me, I mean, I'm all over the place. I'm on LinkedIn. I'm on all social media. It's just my name, right? So Tara, Tara. That's the last name that is.
Yeah.
It's Alderete.
It's Spanish for those of you that don't know.
Beautiful name. Alderete. And please check us out at moneymanagement.org. You can do a free debt and budget session, get a budget, get a financial action plan, take advantage of tools, resources, webinars, articles, links, all the different stuff. So moneymanagement.org or Tara Alderete.
There you go.
Excellent. Well, thank you guys so much for joining us on
was
this
good.
episode of the podcast. It's been fantastic. I think the thing that I'm taking away from this, because I think we heard the word probably 25 times, budget.
Yeah.
But the other thing that I think you guys have illuminated that's really valuable is being aware of what you're doing, paying attention to what you're doing, but also being optimistic and realizing there is opportunity out there. You just have to find it.
Yeah, absolutely.
So again, thank you for joining us. Thank you out there. We hope you've gained something from this. This is the last episode prior to the conference, but we will have more episodes following the conference, and we've got a series of guests lined up, so look out for what's coming in the near future. Thank you so much.
Thank you.
Thank you.